So of course it's going to plan, but your alts aren't yet. And so therefore you are miserable.
So we think this is just the beginning.
You are actually the one enabling the value of what people consume.
I'm going to tell it, create a smiley web page. Boom.
I'm going to preempt those comments that say, disappointing launch. If the tech is so great, why didn't ICP pump? Welcome back. Another life-changing week for early-stage investors. You may say, well, it wasn't a bull market. Nothing went up. How is it life-changing? If you study the people that actually made life-changing returns by just investing, you quickly realize that the bull market is like the last step. Leading up to that bull market is many steps, lots of hard work, lots of understanding, lots of painful charts. The best time to buy Amazon.com was after it crashed 99% and dollar cost average into it for years. That's how you made the most money with Amazon.com. Jeff Bezos is on his $500 million yacht only because he was building in the downturns. He understood what the future looked like, and he was happy to just hold his stock through the turmoil, right? Because he knew exactly what was coming. So why was this a life-changing week? Because lots happened, right? So we learned so much more about what the future is going to look like, and we had the opportunity to position accordingly, and we're getting very close to that massive up move. So in this video, we're going to talk about when that massive bull market is most likely to come, and we're going to look at the perspectives from a lot of different people that study this space. So first, to understand when these assets are all going to skyrocket and pump, we have to understand what moves these assets. What are the key drivers of crypto altcoin prices? So to start, here is the chart of the ISM manufacturing PMI. What you can see is that this chart looks exactly like decent quality altcoins. We had the massive fall starting in 2021. 2022 was horrendous. ICP also had a massive fall in 2022, and 2022 was also horrendous. Chainlink, massive fall in 2022, right? So what do these two have in common? They're correlated to the ISM. What do most altcoins have in common? They're correlated to the ISM. What happened in 2023 into early 2024? The ISM, which is a measure of the economy, went up. What happened to ICP at the end of 2023 into 2024? It also went up, just like clockwork. Did Chainlink go up? Absolutely, right? Into 2024, Chainlink went up, just like the ISM. The ISM measures economic activity. So your altcoins are almost perfectly correlated to the ISM. Again, we're trying to understand when our altcoins skyrocket. We have to know what is the key input to causing our assets to skyrocket. So what happened after they moved up in early 2024? Well, the ISM crashed. Okay, so what happened to ICP? ICP crashed, just like the ISM. What happened to Chainlink? It crashed, just like the ISM. So you have to understand the macro picture and how important it is for your altcoins. So we know altcoins are almost perfectly correlated to the ISM. So what moves the ISM?
So Bitcoin is priced for a weak business cycle right now. But guess what, children? Our financial conditions index, which is the dollar, rates, and oil, screaming higher, and it leads ISM by 9 months. And that tells us ISM should go up a lot. So that means you guys are all going to start earning a bit more money. Your businesses is going to do a bit better. This is what drives alt season. As this all picks up, this is the dominant driver of the whole thing. That all lies ahead. I know it doesn't feel like that now, but that's what's coming. You say we can never have an alt season again. You can't have an alt season really with the ISM below 50. Once it goes through 50 on the upside, you get alt season. Why? Because people have disposable income and they end up investing further out the risk curve. Happens in small cap equities, happens in emerging market equities, happens in all sorts of things. It's the same risk curve. It's all to come. So just have patience with this. I think it's started, and we will see a dramatic shift in what's happening, particularly after the tariffs get agreed. And what we find is people stop freaking out about oh my God, they're putting a gazillion % on China, and China's going to put gazillion % squared on the US, and we're all going to die. None of that's true. It is all fine. It's all working according to plan. And those of you who think it's not, Bitcoin hit an all-time high. So of course it's going to plan, but your alts aren't yet. And so therefore you are miserable.
So financial conditions move the ISM. Financial conditions are changing. That's what that blue line shows. So in theory, that would mean the ISM is about to move up, and that would mean altcoins are about to move up. For me, it's always been about rates. What has kept the ISM down? It is rates. This is the chart of the 10-year bond yield, right? Interest rates are the oxygen of the financial system. All these manufacturers, they can't do anything without credit. Credit is way too high. It's way too difficult. The cost to borrow was way too expensive. Again, the oxygen of the financial system. It suppresses everything. So when this line moves up like it has done, the ISM is suffocating. The entire economy, all emerging technology is suffocating. So until we see rates come down, I don't see a lot of movement in the ISM. Now, can rates move down suddenly at any time? Absolutely. Again, I covered this last week. What is one of the most impactful messages we've heard in the last 4 years? It's the video I shared last week of Scott Bessent, the Treasury Secretary, talking about what they're going to do about rates. The market could price this in way ahead of time. The market could price this in very soon. Say, oh, what Scott Bessent just said means rates are going to fall. When rates fall, the ISM goes up. When the ISM goes up, altcoins skyrocket. I'm going to pile money into altcoins. So what did Scott Bessent say that could trigger a potentially huge altcoin bull run?
And let's talk about the supplemental leverage ratio, which seems like an obscure thing off to the side, but it has been the subject of much discussion. And it does, as I understand it, relate to U.S. Treasuries and yields on U.S. Treasuries, so that if major banks held more U.S. Treasuries, it would bring yields down. You've said you're going to take more of an active role, as I understand it, with respect to some of that banking regulation. Where are we with that?
I think we are very close to moving the supplementary leverage ratio, SLR. That is moving along very quickly. So I would think we could see something on that over the summer.
Over the summer. And knowing the markets as you do, would you anticipate that might have a significant material effect on Treasury yields?
I think it could, because I've seen estimates that it could bring yields down by tens of basis points. Certainly during the COVID crisis, it was temporarily taken off, and it had a big effect.
Again, it really doesn't get bigger than what he just said. I covered it last week, but I just have to keep bringing it up because we're talking about when the next bull market starts. And what he just said is that they're going to remove a regulation that prevents banks from buying a bunch of U.S. Treasuries. So when banks start being able to buy a bunch of U.S. Treasuries, they pile money into U.S. bonds. The more money flows into bonds, the lower interest rates go. When interest rates go down, similar to what happened the last time they temporarily removed this legislation, the ISM does this, right? So he's like, during the pandemic, we temporarily removed this legislation, interest rates fell, and economic activity skyrocketed. That's how they saved the United States from one of the worst economies we have ever seen. And they're talking about removing it permanently this summer. Again, we don't know exactly what this summer means. It's June. It could happen very, very soon. Again, I think the market's going to front run this. The smartest money on the planet, the big whales, are going to see this coming a mile away, and they're going to position accordingly. So the markets could move way before this actually takes place. That's why it's difficult to time. But again, expect a massive drop in interest rates, and expect a massive increase in the ISM, and expect a massive increase in altcoins.
Okay, great. The world's going to end according to X. It's all the worst thing. No. Firstly, by July, they will be using the SLR to allow primary dealers to hold more bonds. That is code for, hey, listen, you guys in the banks, stick bonds on your balance sheet, give some leverage out into the world, and hey, presto, new bars of bonds. Banks make money because they can lend it out. They were not allowed to do that post-2008. This is a big change. Scott Bessent is a bond salesman. Donald Trump is a bond salesman. They're all bond salesmen. So if bond yields get too high, Scott Bessent has already said, as the Fed have said, we will step in.
So he just said July is around the date when they're going to be rolling back the SLR regulation. We know when they roll back the SLR regulation, that's going to crater interest rates. That's going to cause the ISM to pump. That's going to cause altcoins to pump. Now, obviously, we could just tank leading up to it, or smart money, big whale investors could front run that. And that would cause a massive pump in altcoins beforehand. But Raoul Pal's best guess is July. So we're heading right into that life-changing move. So I cannot even fathom how people could be whining about the price of these assets when we know exactly why they're down, and we know exactly why these assets could skyrocket in the very near future. It's all correlated to ISM. So if you're bearish ICP or Chainlink, you're bearish the ISM. Do you know about the ISM? Do you know what's moving the ISM? You have to be bearish or bullish altcoins. You have to.
Bitcoin represents three things. It's a technology, so the blockchain underlying Bitcoin, which is a layer that the internet missed out on in the early 90s because developers had no idea financial services would take place on the internet. So now that is now being put in place. It is a store of value, and it is a new asset class. It does not behave like other asset classes. During the regional bank crisis in the US in early 23, it boomed because everybody understood no counterparty risk here like the banks had back then. So it doesn't behave like any other asset. And that means that institutions and asset allocators have a duty to assess whether it deserves a role in the portfolios or their asset allocation. The $100 billion that I mentioned, institutions have to either take up those newly minted Bitcoin, and that's going to happen over years and years, or they'll have to pay up to get holders to sell it. So again, scarcity value will drive or will increase because of the supply-demand imbalance, with institutional investors really having very little involvement yet. So we think this is just the beginning.
So Cathie Wood is extremely bullish Bitcoin for the reasons she laid out. In my humble opinion, as an early stage investor trying to make life-changing returns this next bull run, it might be a mistake to be too overweight Bitcoin. Here's the chart of Bitcoin dominance. In orange, we see Bitcoin as a percentage of the entire crypto space, 63%. It started in 2013 at 94%. Now it's at 63%. So it's declined significantly, 30+%. And we just talked about how alt season is tied into the ISM, which should go up when interest rates fall. So what happens to the orange line whenever we do get that spike in ISM driven by lower interest rates in alt season? The orange line spikes down. Imagine holding Bitcoin when that orange line spikes down. You don't want that. In gray, we see others. These are altcoins, not including Bitcoin or Ethereum. They started off 2013 at like 5%. Now they're at 27%. We know why altcoins have been so weak in this macro environment. Again, all tied to the ISM. That's all about to change, Raoul Pal says, in July. So wait for these alligator jaws to snap shut. So which altcoins will provide life-changing returns when those alligator jaws clamp shut? Well, in this channel, we only care about the highest quality assets because the biggest mistake the early stage investors in the internet stocks made was buying garbage, thinking it's going to like outperform Amazon over time. It didn't. Amazon is like one of the few assets that provided truly life-changing returns because it was the highest quality, right? So we don't want to own a bunch of trash. If a billionaire won't want to buy your asset in the future, it's not the right asset. Retail investors are minnows swimming in a sea of whales. Whales decide where money goes. Whales only want the highest quality assets. They don't want garbage meme coins. Minnows might fight over meme coins and rug pull each other, but big whales decide where the world's capital flows. And they're going to want the highest quality assets like they always do, right? They want the best real estate, the best stocks. They're going to want the best cryptos. So two of the assets we cover on this channel are Chainlink and ICP. First up, here's the head of Chainlink, Sergey Nazarov.
I think the way that many people think about the world is through the lens of what they use. So people, for example, can use a sink, and they know how to choose different sizes of sinks and sinks out of different materials. And they know how to use a faucet, and they know what faucet they like and they don't like. But really, the sink and the faucet are the very end of the process. The real thing that's providing the value of water to you are reservoirs, various siphons, methods of moving large amounts of water, all kinds of systems that go under the unattractive word plumbing. But at the end of the day, if we were to look at everything involved in providing you the value of water, the sink and the faucet would be involved in approximately 10%. And all the other stuff, all the plumbing, would, in my opinion, would be providing you 90%. So in this sense of the word plumbing and plumber, I am personally very proud to be working on plumbing, because from my point of view, if you're building plumbing or what is known as infrastructure in the software development community, you are actually the one enabling the value of what people consume.
Imagine owning the plumbing infrastructure of the future internet that is being built right before our very eyes. If you could have just bought the internet back in the early stages of the internet, how much would that be worth today? It'd be worth trillions and trillions and trillions and trillions of dollars. With blockchain technology, we can own a piece of the digital world, and Chainlink is trying to be the plumbing. They're building themselves up to be the crucial infrastructure layer of the internet. Are they succeeding? Let's hear from KPMG. KPMG's global revenue for 2024 was $38.4 billion, right? This is a massive consulting firm. And this is KPMG 2025 futures report. Again, how do you make life-changing returns? You look into the future, you look at which assets are going to make the most money in that future. It's that simple, and you buy them as cheap as possible. What does KPMG see for the future? Chainlink's cross-chain interoperability protocol enables Swift to settle tokenized assets across Ethereum, private ledgers, and other chains without requiring institutions to overhaul existing infrastructures. That is massive. Instead of establishing separate systems, these integrations enhance the functionality of the current financial infrastructure. They hint at a future where interoperability rather than disruption will shape the progression of digital finance assets. And so how big does KPMG think Chainlink's reach will grow in the future? Well, they're highlighting Chainlink's role in the current $240 billion market cap of stablecoins, with Citi's baseline projection showing the market jumping to $1.6 trillion by 2030. So that's how big the stablecoin market is expected to grow, right? Exponentially. The World Economic Forum estimates that up to 10% of global GDP could be tokenized and transacted on blockchain technologies by 2027. That's in 2 short years. 10% of the world's GDP, trillions and trillions and trillions and trillions of dollars. Chainlink, they're saying, will play a big role in that. And then $30 trillion. The market for tokenized assets is projected to reach between $2 trillion and $30 trillion by 2030. That's the future. Chainlink is going to play a massive role in it. What does that look like? Well, this is something we've already seen be rolled out in the past. These are some of Chainlink's partners that have worked with it in building out this future, right? We have Chainlink CCIP in the center. We have Microsoft in the middle as well. We have banks to the left, and we have central bank digital currencies to the right. And so companies like Microsoft, which have already conducted an experiment using Chainlink, are going to be leveraging Chainlink to connect central banks, CBDCs, the government on the right, to smaller banks on the left, right? Chainlink, the glue that's holding the financial system together. Doesn't get bigger than that. Absolutely massive. It's what's being built before our very eyes. Another asset we talk about is ICP. These are the top chains by gross profit in May 2025. May 2025, so recent. Again, what are billionaires going to want to own? They're going to want to own the highest quality assets on the planet, the Manhattan real estate. They're not going to be trying to flip desert real estate or low value real estate that people can get in cheap. They don't care about that. They want the Manhattan, the Times Square. They want the Miami Beach. They want the Los Angeles, because that real estate doesn't go down as much as the rest, but it goes up more than the rest. The highest quality asset with the highest cash flow generation potential. That is all that matters to smart money, big money. These are the top chains by gross profit in May 2025. A massive month for Hyperliquid. Good for Hyperliquid. Tron as well. Ethereum as well. Base, that's Coinbase, $5.8 million. Solana, $4.7 million. BNB Chain, $1.5 million. Arbitrum, $953K. And then guess what? The small market cap undiscovered internet computer. $900,000. So BNB chain, which has a market cap of tens of billions of dollars, is about to be eclipsed by ICP's profit of $900,000. So ICP deserves to at least 10x to get close to what BNB chain is generating. This is in a down market. This is while ICP is totally unloved and totally undiscovered. Again, we want to make life-changing returns. We don't want to buy an asset worth tens of billions of dollars or hundreds of billions of dollars. You could look at something like Solana. Is the smartest money on the planet going to bid Solana up to trillions and trillions of dollars of market cap? That would be a life-changing returns for Solana. Are they going to bid it up when it's only making 4 times what the world computer, the internet computer, is making? And the internet computer has a tiny fraction of the market cap of Solana. It's like 50 times smaller than the market cap of Solana. Now, what happens in a world that the future governments, the most important institutions on the planet are building? What happens in the world that's where trillions of dollars of value is tokenized, moved on chain onto these high quality blockchains? That value trickles onto the world computer because the world computer makes more money per user than all these assets because it gets paid for the compute it provides, the storage it provides, not just the blockchain layer. It's a computer. The other ones are blockchains. ICP is a computer, a decentralized supercomputer, right? It makes way more money. So it can far surpass these other assets with a fraction of the users and a fraction of the value. That's why it's hanging with the big boys on the global stage. And by the way, Cointelegraph, a very legitimate crypto institution, shared this chart. So we're early stage investors. We find that deep value before the world's smart money bids it up to the hundreds of billions of dollars of market cap. Here's another look at what's going on with ICP. This is ICP development activity in blue compared to Ethereum's development activity in red. We are seeing a spike, a massive increase in development activity. What does development activity speak to? Generally, future revenues, right? Applications are being built. This is what AI says about this difference. While ETH has had years to mature, ICP is already showing unmatched growth in development activity at this stage of its evolution. Unmatched growth in development activity at this stage. What truly sets ICP apart is its groundbreaking tech. It's far ahead of Ethereum, bringing innovations like on-chain web hosting and infinite scalability. Ethereum never had this level of dev momentum early on, and its current tech is decades behind what ICP is delivering today. Builders know where the future lies, and it's with ICP. So what is being built on this world computer? What is this big increase in development activity pointing to? Well, this is the head of the Definity Foundation, Dominic Williams, on the tech being built on top of the world computer.
What if everyone could create online apps and services just by talking? Today, there are about 35,000 Web3 engineers in the world. In the grand scheme of things, that's not very many. Worldwide, there are about 15 million full stack engineers. But tomorrow, with the self-running internet, everyone will be a builder. Costs will come down to 1% of what they were before, and the time to market will come down to something like 1% of what it is today as well. These apps run on a sovereign network. That's created by hardware run by independent parties all over the world. That's combined by a mathematically secure network protocol called Internet Computer Protocol, which creates a revolutionary cloud computing environment, which we refer to as the Internet Computer. For caffeine, mobile users are first-class citizens. This is very much a mobile paradigm. So let's start one now. I'm going to tell it, create a smiley web page. It's now deploying it to the network. Boom. Okay. Let's create a personal blog using the styling of Medium. A blog post has a title, a rich text body, and tags. I'm going to add in a publish date. Okay, so here we go. Okay, so let's look at this blog. Let's open it in a separate window. Get it right. Okay, this is my first post on my blog, created using caffeine. Blah, 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 this is really cool, etc. Really, really cool. Okay, you can just make the first word bold or something. And then tags. Okay, so ICP, obviously. SWI, self-writing internet. Caffeine. All right, save this post. There we go, my first post.
What other crypto project can come close to doing that? What other tech project can come close to doing that? If you want a website, all you have to do is log into the world computer, speak to Cathie and AI, and create whatever software application you want. And that's all taking place on a blockchain. So in the next bull run, when these alligator jaws close and altcoins outperform Bitcoin, what's the world computer going to do? I'm probably going to get some comments. In fact, I'm going to preempt those comments that say, disappointing launch. If the tech is so great, why didn't ICP pump? And I already showed you how ICP's chart is mirroring this chart, the ISM. They're the exact same chart. Because ICP is so early stage. It's emerging growth technology. So in no world where the ISM is crashing can we expect even the highest quality growth assets to skyrocket. It's the same reason Amazon, Google, and other revolutionary internet stocks crashed 99%. It wasn't about the tech. It was about early stage technology trying to survive in a rough macro environment. So anyone who's complaining, thinking that, oh, great tech is going to move the chart. It's not. I wasn't surprised at all that the price did move. I was expecting the price not to move because I understand the macro environment. Now, which assets are going to absolutely skyrocket when these alligator jaws close, when altcoins outperform Bitcoin, the highest quality assets? Again, we don't want to make the mistake that the early stage investors in internet stocks made by buying low quality garbage assets, hoping they're all going to pump together. We want to buy the highest quality assets, the future Amazons of the world. If Cardano could 100x last bull run and it has nowhere close to the tech or community that ICP has, or the revenue per user economics, then what is the world computer going to do when these alligator jaws close and altcoins skyrocket? Raoul Pal thinks July 2025. It could be sooner. Smart money could front run it. But this is the world we are living in. That's why it was a life-changing week to be an early stage investor. This was not a week to do nothing.